Fintech Chatter. Brought to you by Tier 1 People, leaders in Fintech executive search. Welcome to Fintech Chatter, the show where I connect with Fintech leaders for a bit of a chat. Today I'm joined by two pretty special people to me, Kristofer Rogers of Eonx and Ben Ford from Frollo. Chaps, thanks for joining me on this special end of year 2022 review and also predictions for 2023. Merch King.
Hi Dexter, how are you?
Good, mate. Do you want to tell our listeners a little bit about who you are and Frollo?
Sure. So my name is Ben Ford. I've been around the fintech traps for a while. We've been shooting this breeze since probably 2016, 2017, if memory serves. Frollo, we're a purpose-led fintech. We have a consumer money management PFM app that helps consumers manage their money better. We do a fair bit in open banking. We also build banking apps for banks who maybe don't want to necessarily do it themselves or don't have the resources to do it themselves. And we're on a mission to make people feel better about money.
Now, Chris, before we talk about Eonx, there's a secret that I've been keeping.
Here we go.
And it's something really cool. Might I even say it's a little bit crazy? Right. Share with us.
All right. This is the Kristofer origin story, I guess. But look, I studied music. Commercial music was a degree in London. And during that time, I was lucky to, get into some studios. And I've actually had 2 number 1 hits. Global number 1 hits is working for Ben's face. And then the funny thing is it was all by happenstance. I happened to be, just taking in the atmosphere in a studio, and I got on the keys and landed a production credit on Mark Morrison's Crazy, which is the worst song in the world.
From Leicester, from my hometown.
Yeah, so I feel he wasn't there. I think he was on parole or something, but it was just, it's such a bad song. And I got substituted out of the video, right, for this beautiful chick playing the keyboards. So I'm no Bieber, but it got me into technology. And music was an early adopter of software and sampling.
Yeah,
so
absolutely.
That's probably why I'm in fintech now.
That's amazing. It's really like Return of the Mac.
It is. Well, I think it has to be now known. If I've got Merch King on my left, I've got Chris, the Mac Daddy Rogers on my right.
I'll take that.
But Chris, tell us a little bit about Eonx and a little bit more about yourself in the context of fintech.
Fintech. Look, I cut my teeth in 2008 by launching a peer-to-peer platform called GoFundraise. So peer-to-peer donations, so still payments. But fast forward to now, having been at the helm of Zepto, formerly Split Payments, I'm now at Eonx, which is a loyalty platform play. So we build loyalty platforms and reward platforms for the likes of Bupa and MasterCard. And we're a payments play. And that's really why I'm in the room. So there's a MasterCard Pay by Account platform overlay service launching next year. So that will be a mega trend, I hope. So that's where we are today.
Awesome. Well, look, Ben, you're renowned for your fintech T-shirt collection.
Heavy burden.
Yeah, we're going to talk about the year that was 2022 before we get into the deep and heavy stuff. Which has been your favorite T-shirt of 2022?
Oh, look, I think without doubt, it's the Eonx that was unfurled at Intersect this year. You were part of that.
Right?
It's on Instagram. It was videoed. That was a great moment because that had been maybe 2 or 3 years in the making, Chris. We'd sort of been talking about this.
Every time I see you, yeah.
It's good. But the other stuff I got to call out is some of the We Money merch that the guys went to town with. Not so much T-shirts, but jumpers as well. They really sort of went all in on some pretty creative, pretty innovative sweaters there. And I guess the other sort of key theme in merch of 2022 has been the return of the sock. So my sock drawer is now busting at the sock.
That's great.
So I've probably got 15 to 20 new pairs of socks, which will keep me going and probably amount to a few Christmas presents for various people as well. Those lucky souls.
Lucky souls. I see what you did there.
Yeah. So, Chris, we're in Sydney today. It's awesome for us all to be together in person. I mean, you come from Lennox Head. I've come from Lake Macquarie. You were here for the AusPayNet conference. It's the first time it's been in person for, 3 years? looking at the data this year, there's, whilst it's been a tough year, I think on the whole for the industry, the two kind of dominant forces I think that have come out this year, it's still payments and lending.
Yeah.
So let's talk a little bit about payments first, Chris. And what's been your kind of take on the standout moments for you this year?
Yeah, I think there's probably three standouts I can think of, two good, one bad.
Right.
The first is real-time payments becoming of age, achieving volume. RTP is of high interest in the States and Silicon Valley now. Investors are talking and calling about it. So, and yesterday at the AusPayNet Summit, the governor of the RBA, Philip Lau, showed us a slide of the uptake of NPP. And we're 5 years in now, and we have faster adoption.
5 years.
5 years, can you believe it? A pesky pandemic got in the way. But we've got the fastest adoption of real-time payments than the people that preceded us. So Denmark, Sweden, Singapore, UK, of course. Second only to Hong Kong. So the adoption is really, really good, and we've achieved volume. So that, I think, is a big standout. On the other side of the coin, though, Pay2 was a bit meh in terms of when we launched. Only one major bank really plugging into it. So that's a disappointment, and the fintech sector share that disappointment, and so did the governor. So we've got a new moonshot for next year, so that might be a trend. But that was a bit disappointing with a lot of fintechs, pinning their payments tail on the Pay2 donkey.
What do you think has been the reason for the slow uptake?
If you look at the infrastructure here, the payments infrastructure, it's owned by banks. There's an infrastructure cost. There's a cost recovery. There's significant investments to make with these major banks to roll out open banking. So that's just happened. And now there's another big infrastructure play. And we're seeing partnerships with fintechs now, which will expedite that. But I think that's what it is. It just doesn't all add up in terms of a competitive landscape.
Yeah. We've obviously got Kuskal, who's kind of in the mix, who's trying to compete and give a little bit of competition to the big four banks. But what else do you think needs to happen, for this?
Well, I think we're down that road now where we just need to commit to it, and the major banks are all committing to April, so Q2. So that will be interesting to see, and a lot will fast follow. But I think it's necessary. We know that BEX, which is our payments rails, has got a sunset, and we were talking about that yesterday. So this real-time payments will be the new direct debit. So the thing that worries me, though, it's a crowded market. NAB yesterday announced a partnership with Banked over in the UK to bring Pay by Bank here. MasterCard, as I said earlier, are working with us to deliver Pay by Account. So there's quite a few overlay services. How many can you have here? And hopefully we'll talk a bit about Australia and why fintech is so alive and well. But payments is exciting right now.
Yeah.
Who would have thought?
We're going to talk a little bit later on about the Web3 part as well, because I think there's some interesting stuff happening there.
I have a view on that, Dave.
Yeah, I think we both do. So that's going to be interesting. Ben, we said before that the other kind of dominant force is lending this year. It feels to me like some areas are really thriving, like business lending. And then you got others like buy now, pay later that are kind of feels like they're really on their knees, very much struggling. What's been your take of the lending space in 2022?
Look, I think the whole lending market is contracting massively. I think just at slightly different rates. I think whether, you've got mortgages, personal loans, buy now, pay later, short-term credit. I mean, you mentioned sort of SME and business lending sort of seems to be more immune than others, but all of those other segments, as far as I'm aware, all of the customers that we're speaking to are slowing things down. They're not lending as much. If you're a mortgage lender or you're a neo mortgage lender and you don't have a balance sheet of a bank to lend off, then your cost of funding has gone up exponentially and, your rates have to go up. People are scaling back their marketing, they're scaling back their teams. I think it's the same applying in consumer credit as well. I think buy now, pay later is kind of just in a bit of a basket case / holding pattern at the moment, unfortunately, and will probably be proven to be a feature that's added in or tacked on to something else, or perhaps a sort of a banking or neo-banking type app or financial services app. I just think the whole sort of inflationary pressures, rates going up, people are sort of slightly more cautious, don't have as much sort of free money to spend, and lending's just bearing the brunt of that. Absolutely.
we talked about, and Chris just mentioned CDR before. You and I have talked about this a lot. I think we talked about it on the Intersect review as well. That conversation just seems to be going around in circles for 4 years. And there was something that came out yesterday around, and I think it was a post from the AusPay Net. Yeah, it was yourself, Chris, actually. Yeah, which was, what do we need to do? And for the last 4 years, I've been saying, engage with customers and consumers and ask them what they want, because nobody has done this, right? And we keep having these discussions around regulation and policy and regulation and policy. Same people, same voices, and it just doesn't seem to be going anywhere. What do you think, right? First of all, needs to be done? Does anything need to be done? Is it actually going to be something? And if it is, could it be the catalyst to kind of, really create some momentum in those areas of lending that you've talked about that seem to be consolidating right now?
Potentially. Potentially.
Yeah.
The answer is yes, no, yes, no, and yes. So let's just go back on that. Okay. So a few points. So there could be one argument, the sort of contrarian or controversial view. Open banking could just end up being the biggest fizzer going. Unpopular opinion, plot twist, but I don't think that's the case.
Well, look, we've seen it with the ASX and the chest replacement program, right?
Yeah, absolutely.
I mean, no, having said that, though, it's, let's put it in context. It was 230 million. It's not huge, right?
Well, no. But in terms of the slow burn that we were talking about before, we did some research recently that in 2000, if we were having this conversation in 2020, there would be between 5 and 7 people ready to do any open banking in Australia at the moment. This is just businesses to offer open banking enabled services. Or open banking enabling services. As of back end of November, so last month, there's now 77 accredited participants ready to go, 45 plus of which are fintechs. So what does that tell you? It tells you, one, in terms of sort of percentage terms, that's a pretty decent growth rate. It also tells you that 45 fintechs, even sort of open banking being sort of not market ready, but sort of mature, you've got 45 fintechs that have openly said and decided that they want to go down the open banking route because that's a more desirable way to ingest consumer data or enable consumers to share their data than the alternatives, which were electronic data capture, screen scraping, whatever you want to call it. So we're sort of getting, I wouldn't say it's a sort of groundswell, but certainly there's some momentum building and shifting after a couple of years of, as you say, very, very, very slow burn. So that's great.
Yeah.
There's also this pressure now. There was an article in the AFR yesterday. The government might actually start to do stuff around banning or blocking screen scraping. So some banks are starting to do this already. You can't, on an ongoing basis, scrape Macquarie Bank. I think NAB are potentially going to bring in some MFA, multi-factor authentication. You can't do HSBC. There's a couple of others. Obviously, you can't screen scrape Ubank or 86400. You can't screen scrape Up. So if you've got a consumer app and you want to target 400,000 millennials who have an Up account and you've got a product that might be interesting to them, then you need to be open banking ready to enable you to open the doors to those 400,000 customers who might be potential prospects. So I think things are going to sort of change more quickly than we've seen. We were just looking at the numbers for the UK, or how when they phased out screen scraping in the UK, where there was an open banking ready alternative, i.e. bank that had their data available via open banking, things took a long time to build up and then happened very, very quickly. So hope, prediction, pray, is that 2023
predictions are later on.
Is going to be.
You've got to hold that thought. Yeah.
But you see where I'm going. So I think that sort of finally it feels like there's more of a reason to be sincerely positive, sincerely optimistic. Right. It still goes back to the question: how do you get consumer use cases that consumer want, to your point? So is it just a problem looking for a solution? And I think that's probably where there needs to be a bit more education and things need to be teased out. Consumers actually don't need to know anything about open banking. It just needs to be powering features in their banking app that make their lives better, enable them to switch accounts more easily, not get stuck on interest rates that are too high, because it's just such a pain in the backside to move to a different rate.
No, you're right, Ben. And it's the use cases. We need better use cases around open banking. And look, I'm a payments guy, but I think the marriage of open banking and payments, which we coined at Split, is a beautiful one. Getting data insights to make a happy path more likely than an unhappy path. So we're not seeing those yet.
Yeah, and look, I'm with you on that, Chris. I think the thing that frustrates me more about open banking than anything else is that, the kind of premise has always been, we can use this to create better products for people. For me, it should be, we can use this to actually create a much better credit decisioning process, right? It's based on actual real data and not some kind of algorithm that was created in 1973. And I think, the environment that we're coming into, I think responsible lending, certainly the regulators, and then what's happening buy now, pay later. There's a lot there by which, rather than putting it onto the consumer, as you said, is that, hey, how about we use this to actually create a fairer system? Which, look, that's why I'm in fintech. Sure, it's kind of why you guys are as well, right?
The utopian aims.
Well, look, I think it's not necessarily utopian, but it's our kids, right? We want them to grow up in a fairer, kind of system that rewards them for good behavior
and be socially and financially aware. So that's very true.
Chris, last year's review, we did talk a lot about Web3. Remember?
Tried to forget.
Mate, I actually watched it, Ben. We were wrong on every single level, right? We were like, mate, we were high as kites.
Oh dear. Drinking the Kool-Aid, guys. Drinking the Kool-Aid.
Sure about
the
this.
Web3 rabbit hole. Yeah, it turned out to be the Web3 toilet hole, but
We did have a couple of very bullish Web3 fans, or certainly Bosco was very keen.
yeah. But he has gone down that path. He's at Immutable now, I think.
Yep.
But look, mate, I've been pessimistic about Web3, mainly because I think that the hype that's been around it, and a lot of the noisemakers that now thankfully moved on to AI, which I think is great. But I think I've kind of firmed my views on Web3 now, and I think it's very much I see payments and kind of crypto world merging, which for me is Web3. And look, you're a payments. You're far more kind of deep into payments than I am. What's your sense as to Web3, and kind of what, if any, role does it play within fintech?
Well, firstly, Web3. I think I'm with Elon on this. It's just a catch-all buzzword.
Yeah.
For the listeners or viewers or subscribers that don't know, Web 1 was obviously read-only. You read stuff on the internet. Web 2 is read-write, so that belongs to social media. But Web 3 is Ethereum called it, who coined the phrase, the founder there, as read, write, and own, right? Yeah. And I buy into the premise of Web 3, and there's just so many things, components to it, that I don't think you should bundle it all up. The problems I see, I share your view, and a lot of my network are going to hate me or get triggered by what I'm about to say, but I think the native payments vehicle, crypto, is its biggest kryptonite. Yeah. See what I did there? Because, it doesn't stand up at this point. Even on a basic level, where we're processing 55 million transactions a day here, right, in Australia. Ethereum doesn't touch 1 million a day yet. And this is the controversial bit. I think smart contracts are dumb. And by that, I mean that layer 2 protocol through which these coins are achieving transactional scale are vulnerable. In the past 12 months, more than $1 billion have been stolen, probably all by Kim Jong-un, but it's vulnerable. And so imagine if crypto was our currency, and this was said at the summit yesterday, we'd have 300% inflation today. And we're freaking out in single digits, right? So it's just not quite there yet, but for the record, I'm a fan. And I think payments has always had a blockchain sensibility about it. Yeah. All the banks use immutable data in their ledgers. That's blockchainy, right? It's just new tech and a different way of packaging it, and more robust tech. So Web3 in and of itself, I think is too much of a catch-all, and I don't buy into it. Yeah. But the things around it and the premise of it being, permissible, non-permissible, and all of these sort of utopian ideas are good fundamentally, but I just don't buy it, guys.
I don't buy the utopian, but I think my kind of view on it now has firmed around, if you look at everything that we've talked about today, right, we have over the last 5 years, despite it being at the edge of innovation, we're still using technology to build stuff that was analog world driven. Products, everything, right? We're still talking about products like lending products that are 70 years old, right? And we're just making them a little bit more faster, a little bit more efficient.
Right.
For me, Web3, I think, is that it's the infrastructure by which we actually build a truly digital world. And an example I would give is we've got solar at home, we're getting a battery. But the reality is, right, whenever we put energy back into the grid, we get a credit, right? And we spend that. And then, and so you look at that and say, well, why is fiat or any money involved in that exchange? Why shouldn't there just be a pure energy exchange of, hey, so many kilojoules have gone into the grid and you can draw them back because you've got that in the bank? For me, this is where I think Web3 comes into it, and the very notion of money then becomes challenged. And what it becomes is, what I've believed, I remember Cybos 2018, I came away from that going, this is about how the world exchanges value.
I'd drink that Kool-Aid.
Yeah,
That's
so kind of look. That's my kind of utopian, but it's not democratized. It's not that we're all going to be. I think it's very much around the infrastructure that's going to enable just way more efficient, systems, and help solve, facilitate this, the solving of some massive problems around climate change and agriculture and food supply and supply chain logistics. But anyway, I'm going down another rabbit hole.
We just got all serious there, Dex.
Rabbit hole again. Ben, it has been a tough year for startups. You and I kind of, deep into the space. I think I've personally found it really tough this year, just emotionally. Like just seeing so many people struggle that I really admire and just friendships with. What's been your take on 2022 and kind of how would you sum it up?
I agree. I think obviously a lot of the fizz and the froth has sort of eased away or faded away somewhat. I think there's a few things I point out. How can I put it? It feels like there's a bit of a two-speed fintech economy at the moment. There's the fintechs and the startups that haven't yet reached sort of major scale.
The haves and have-nots, right? Isn't it?
Yeah, absolutely it is. And then even on a layer above that, there's all of the. There's still a lot of sort of.
We need to democratize fintech.
We do, and we've got an app to do it. And it just feels like there's also there's still a lot of investor money. There's still a lot of corporate sponsorship money frothing around and things like that. So on the one hand, there's still sort of events and quite lavish events and things like that.
That's not what I'm hearing. That's really tapered off in the last 4 weeks.
Oh, right.
Yeah.
Okay.
Yeah.
Well, maybe I'm on the death throes and I'm just catching the ones that had already been paid for before the money ran out.
Sorry, guys.
But,
Okay. We're not cool enough.
No.
Ben gets the good tickets.
But yeah, I mean, the teams that were 10 people contracting to 6 and 4, and in a way, it's not in any way a good thing whatsoever. But I think probably we were a victim of the last 2 years. There were a lot of really sort of pretty average ideas that got up and got some money and sort of grew fairly rapidly and expanded and scaled. Add in some of the sort of crypto type stuff and some of those staking businesses and things like that. Great people behind them and great ideas, but really just you just ran a rule of thumb over them and said, look, what's the long term sort of prognosis if the market has a bit of a dip? And I think just probably pragmatic and sense of realism is in the market at the moment, which makes it hard. But I do still think the cream will sort of rise to the top. And if you've got a good business, you'll weather the storm. I find some of the results, the AFR fast growth and all of this, where they sort of measure a company's growth as being the one yardstick of success, but their cost base could have been growing by far more than the actual revenue growth. Yet they don't factor that in, and it's that just seems completely rewarding the wrong kind of behaviour to some degree. And I think that sort of that hockey stick growth. Sort of aspiration is probably now tempered with a more, if you can just get slow and steady sort of high single figure growth, then, you're probably in reasonable shape at the moment. You'd sort of, people would take your arm off for that, I would have thought.
Some leading indicators, that I've seen in recessions, and this is, having recruited through the dot-com crash, the GFC, first thing that goes is hiring, right? So I got to see that in probably March, April this year. I was thinking, this is going to be, this is not going to be good. The second thing that goes is marketing spend. Hence the thing around what we're seeing tapering off of events. I was talking to Steve Vallis, and he was, he kind of echoed exactly the same sentiments. So it's getting very, very tough for people to part with money for these types of things. And then the third leading indicator, which is what I've seen since probably around about September, the briefs that are coming through to us now, the mandate is really simple. Find us somebody who can just run a P&L and keep costs down and grow revenue. And the reality is that not many people have actually had that experience over the last decade. So I think there's kind of some real, very different challenges now that are facing everybody in the ecosystem, particularly talent. I think it's an opportunity for people to develop different skill sets, experiences, dare I say, kind of resilience, and some of those things that we've talked about a lot. I think we're going to have to show it in a different way in this next year. On a positive outlook, what I have seen also though in the last few months is a real increase in international businesses looking at Australia. And I wanted to ask you, Chris, that it does seem strong despite the global economic outlook. What do you put that down to? And look, I mean, why is Eonx chosen Australia as well?
Yeah. I think, despite the macroeconomic headwinds and the still uncertain times ahead, and just a quick comment on the different skill set. It's the VC sector, the investors, that changed the dial a little by putting a focus on actual profit margins, not revenue, and different metrics. And that flushed out a lot of fintechs that didn't even have P&Ls.
Yeah.
So I've skilled up. I've done the Australian Institute of Company Directors course. So give me a P&L and I'll pretend I know it. But about Australia, it's funny, this is actually not a podcast, it's a pomcast, right? We're representing Australia. You'll know this, Dexter, there's a lot of talent here.
Yeah.
There's a lot of talent, and Australians have that entrepreneurial guts about them to take an idea and build a business around it. So that's just part of our DNA.
I actually feel more Aussie than I do English, right? And I think it's for that reason, because coming from the northeast of England, there is almost this parochialism. You had to just have something about you and kind of get out and make things happen, because there's not much that happens there, right? No. It's not like London where you can...
Never going back to Newcastle at this rate.
Mate, I am in Newcastle, just New South Wales.
Yeah, it's a different one. It's from Australia.
Yeah.
But look, on that as well, I think you mentioned internationals looking here. I think there's two reasons they do that. They have a client book that have Australian business, and so they want to replicate what they've done in different markets here. So that's one thing, like Banked and NAB and that partnership. But the other thing is Australia, and we say this a lot, is a very comparable market to the US and to Europe in maturity and payments behavior and consumer behavior, but it's smaller and more controllable. So it's a petri dish for new ideas. So there's two-way traffic here. Right, we've got an Australian fintechs looking to grow at scale in new markets, and we're really good at that. But then it is interesting that a lot of companies are coming in here, and I think it's just an easier market. And the last thing I'll say, though, is I'm getting calls from San Francisco, investors wanting to learn more about RTP here. I think we're actually trailblazing in a lot of different channels that are now rolling out across the globe. So, we're one of the first to do real-time payments, open banking. So they are wanting to learn from us and apply that to the wild, wild west, which is the US, right? So there's just that we're in a really good position here, despite all of those geo comments and, and the spiders and snakes and all of that.
Yeah. Now we're going to move on to predictions, but before I ask you both for your predictions, over this last 4 weeks, I've spoken to over 150 fintech leaders about their thoughts on 2023. Wow. And look, I kind of put it down into data, and the great thing is over 50% see growth opportunities next year. 37% can see potential M&A activity. Only 23% were expecting that they would have to make redundancies, which I'm kind of finding a bit odd, because December, I've never seen so many redundancies ever in my whole recruitment career just before Christmas, which kind of seems a bit, counterintuitive to what the feedback I've been given. This is where it gets interesting. So 73% of leaders are planning or have already enforced a return to the office on dedicated days. And that was either, anywhere between 2 to 3 days per week. 89% of leaders are not entirely satisfied with productivity levels.
Their own or their team?
Their business, right? So this was across the business. Some were talking about teams, some mentioned themselves, but overall as a business, when I asked why, I think how they're measuring productivity is the cost to get the outcomes that they were getting previously, right? And everybody has said that since pre-COVID, if we measured it, those businesses that were there, that productivity levels are down, which kind of, I think it's creating one of the big kind of, paradoxes that we have is that an individual working from home thinks, hey, I don't have to travel. I can get stuff done. I'm being way more productive, but it's not necessarily kind of, also the other thing that I think is being factored in is just the cost of hiring now, because salaries have blown through the roof, particularly at more junior levels. And also that you've got this, we've had this big kind of turnover, particularly in startups, where you're just constantly getting people up to speed. So I think there's a lot of different factors to kind of roll into that. But, my sense is that next year there's going to be a lot more focus, and probably what we're seeing now with these redundancies is that productivity issue coming into play of we're going to have to run lean and mean. Yeah. Look, 61% of leaders expected it to be tough next year.
I find that astonishing.
Yeah.
How would you think in any way, who are the 39 that think it's not going to be tough to raise capital next year?
Rose tinted.
Well, look, and it kind of
they're backing themselves.
To back that up, every single person that I spoke to was sure that they would make it through, even though they thought that there was going to be consolidation in the market, and a lot of the M&A activity is going back to the haves and have-nots point that you raised, Ben. Is the haves are looking, it's kind of a bit like sharks circling the water. Yes. And I think we're going to see a lot of that, kind of 6 months into 2023. What do you make of the finance, chaps?
I struggle with my productivity, and I have to set myself up for success, because it's very easy to idle, and get on the keys again and try and write a follow-up to crazy. So I get that, and there's nothing like face-to-face. So unsurprising that we do want to get together, but it's a brave new world, and that will never be how it was. But I think I don't want to sound negative, but we've got a tough year ahead. Yeah. The trends I see coming, which we'll get to in a sec, are not sexy.
Well, why don't
and
you tell us those?
Sure.
Your predictions.
For me, the mega trend, I think, is going to be, less crypto, more cryptography. It's around scams and cybersecurity that we have to get better at that.
Yeah.
There are vulnerabilities in every infrastructure, and it's not being reported just how bad that might be in a payments.
Yeah. So do you think this is more moving towards a digital ID, sovereign?
That was the second trend. Did you see my notes? I don't have any, but no, it's digital ID.
We're just
we're in sync.
Yeah.
A digital ID. Yeah, we are. Look. I think digital ID is going to be a big focus, and there's some big vendors and the government that are committed to that. And obviously, the third thing I'd say is pay to and real-time payments. There's a lot of that innovation finally coming to market after a stall. So for me, this is going to be super exciting, and for a lot of fintechs in the space or paytechs. But I think security and anti-scam was a big topic yesterday at the AusPayNet Summit. So that's going to be, whilst it's not the exciting part, we all have to build out infrastructure and security that is second to none for us to succeed. So a bit boring, but it's going to be all the rage.
Cool. Ben, what's your big predictions for next year?
Oh, look, I think we're going to get bored of using the term embedded finance. I think everyone is going to become an embedded finance expert like they were an open banking expert 2 years ago. But I do think in terms of what that offers, in terms of the whole piece around payments and additional services to create customer engagement and stickiness and things like that. I was having a great chat earlier this week, and someone was sort of talking about how, you could have Nike with an embedded finance offering, or, obviously Apple are kind of doing their own sort of embedded finance thing. They acquired Credit Kudos in the UK, which is effectively an open banking Rails organization. And just, that these consumer brands with so much loyalty could start offering a broader set of financial product rewards, loyalty around that is to be honest, quite scary, but also quite exciting. But I think at a more sort of prosaic and sort of traditional level, organizations that we deal with, but perhaps don't associate completely with financial services, having a financial service type offering, the idea of having a Bunnings mortgage or something like that, and some brand awareness associated and a very solid product. I don't think that's sort of too far away in the future.
And if I may, Ben, that ecosystem play, that embedded finance, is the new BaaS, right?
Yeah.
But when I was at Mambu, we used to coin the phrase composable banking.
Yeah.
And that's, we're one thing, we're at the core, but then everything else around banking can be provided by a specialist. And we're seeing that. And that's what I think embedded is, like Frankie One, doubling down after trying to be a neobank on AML and KYC. Get big or get niche.
Yeah.
And we're seeing a lot of niche players, which is, so I think embedded, I think it's still hot. We can still use it.
I'm going to say something that I think Dan Canizaro said to me when we were in Singapore. Mm-hmm. And we, to kind of coin that phrase, it was like he was talking about a guy who was a VC and he'd gone down the path of neobank as well. And this guy just kept saying to him, the money's in the pipes, and just kept repeating this phrase, the money's in the pipes, the money's in the pipes, the money's in the pipes, right? It's the infrastructure where the opportunities are. Mm-hmm. And I think, we talked about those that are struggling. They're all consumer-led fintechs. Right. And we've talked about this in Australia for a long time, right? It's just really difficult to make it work because of the competition from the banks. Small population. You can test an idea, but I think to grow a business becomes really, can be very, very difficult.
Absolutely. There's some great apps out there, really useful ideas, really designed to just improve customer financial well-being, whether it's cashback, whether it's sort of additional money management features. But ultimately, some of these things are just features that will be in a broader banking app, to your point. Westpac just invested in Shopback. Right. I think it's highly likely that there'll be some kind of loyalty reward play in the Westpac banking app soon. The idea that you're earning cash back on your everyday spending without even having to link a bank account or anything like that. Completely frictionless. You go to Coles, you get 2% cash back. Well, that's a no-brainer. You do that all day long. Same when you're filling up your car, which now costs $200 and it used to cost $100. I guess the other big theme, and we saw this in Singapore, is the whole, I've just been surprised by how quickly the whole ESG or carbon footprint tracking and the interest in that has sort of blown up. So there's an app called Greener, which open banking powered app, powered by a competitor, unfortunately, but a great little app. But also Kogo do the same on a B2B basis. Now Kogo are out of New Zealand, but established here and in Asia, I think in the UK as well. And they have, their client roster is 10 of the world's biggest banks, 2 of the big 4 over here, NatWest and Santander in the UK. You go on their website, it's literally, they are the Apple of carbon tracking. They're just, going through the gears super, super quickly. I was a bit late to the party. I didn't really see that many consumers would be into it, but they are. The engagement rates they're getting in their app, they tell me are sort of, astonishingly high. So a consumer will say, I want to see what the cost or the carbon footprint of my spending is. And then they go back to it and check it and they sort of smooth it out or they reduce their footprint, and consumers are really sort of buying into that. And again, that's embedded into a banking app, to your point. I do also, the point you said about the pipes. Absolutely. I mean, Proviso, which is now Ilion Open Banking Solutions. Luke Howes started off trying to build a PFM app, and he was trying to get some investment for that. I'm sure he won't mind me sharing this story.
What a great example, though, right?
Absolutely.
Of like bootstrap business.
Yes. Yeah. One of the best guys, nicest guys, best minds, super, super sharp. But they went to try and get some investment, and the bank said, look, we don't really like the investors said, we don't like the PFM idea. It's a bit played out, or it's not for us. But if you can find a way to pull in banking data and do it really quickly, really reliably, and relatively cheaply, then, we think that's something we'd like to back. And that was 6 or 7 or 8 years ago.
Put that in your pipe and smoke it.
Exactly. And the Plaid story is exactly the same, by the way. The Plaid founding story in the US, I mean, they're now worth 10 billion plus, or maybe that's come off a little bit, but exactly the same story. So it's a really good point about the plumbing and the piping.
What are your trends, Dexter?
I'm not with the embedded finance, and here's why. Whenever there's a downturn or a recession, businesses rightly focus on the one thing that they do really well. And therefore, I'm not really seeing Woolies or Coles going, let's be a bank.
Okay.
And so I think it might happen in the future, but I think 2023, if there's going to be consolidation, I think people are going to focus very much on the thing that they do well. And I think, the times like this really focus bright minds. And I think what we will see, you mentioned Kogo. I think there's just going to be things that come out and surprise us. So I'm not making any predictions this year.
But it's a whole of it's a whole of economy point you've just made. Yeah. It's not just fintech. Yeah. You're right. People are going to have to double down on their day job. What they do at the core. So.
But I think that does point to the two-speed. So there are some companies that are kind of a little bit immune from what's going on elsewhere. So they will always have this sort of special projects bandwidth and things like that.
Yeah, I think the special projects, though, tend to get canned, right? Like you just get shareholder pressure around it. So I think that's the thing that I'm kind of, a little wary of. So my view is the innovation is going to come from businesses, like you mentioned, Kogo. On that note, is there anybody that you've got your eye on for next year that you think?
Well, I've got
other than Eonx.
Yeah, well, Eonx. I think. Look, I'm on the board of an aged care and disability provider, service provider called Feros Care, and where our focus is allowing people to stay at home longer, and that's all tech driven. So I'm actually really big on geotech and voice assistance and those kind of things, having a real life social impact on vulnerable communities. So that side of my life is really exciting, and I'm doubling down on that. My share portfolio sucks at the moment, so I'm not going to call out anybody. I'm going to side on you, Dexter. Less is more.
Yeah. Look, for me, I had on Blockchain Chatter podcast last week, David Engel, Stock, where you talked earlier about the scaling problem of Ethereum. These guys have solved it, right? They've processed $750 billion in Ethereum transactions.
Okay.
Right? At scale. And the way that he described it was, if you can imagine, if we've got a big file and we zip it, throw zero knowledge roll-ups, they basically take all these transactions, wrap them up into almost a zip file, and then they go onto the Ethereum blockchain, right? And they then get settled. So it solves a security issue, right? So they've had no security breaches.
Okay.
These guys out of Israel, they're like, you talk about cryptography, they're all cryptographers. So that is the thing. When I recorded the podcast with Dave, who's a mate, it just blew my mind.
Great guy. I'll have to listen to that, Dexter, because there was a lot of talk yesterday in the summit about post-quantum computing readiness in terms of cryptographic algorithmic capabilities. And it was down to not the size of things you can process, it's the speed at which you can process. That TPS. When everyone's topping up their Oz Lotto digital wallet ahead of the draw. That's I think where the shortcoming is, but I can't pretend to have that kind of domain knowledge, just buzzwords. So I'll watch that podcast.
That's great.
A couple of others that I've just sprung to mind. I can't go without mentioning my boy Peter. Peter at Unhedged. Quite interesting. I do quite like the app. I've invested some money in the app, so I had some fun with that. The other one that I found really interesting, I think you've had them on your podcast, was My Gigsters. So I download a lot of these new apps and I go through the onboarding process and just see what it's like. And oftentimes it is quite the same. And you go through that whole process. You may do the AML KYC piece and you sort of get there and it's like, well, okay, well, here I am. What do I do next? So there's not that much you can do. And I was just really sort of, I guess, excited and sort of pleased that there was so much going on in the app, but it all fell into place quite nicely. Wasn't overly busy, but it all seemed very sort of practical if you're in working in the gig economy, which I'm not, so I couldn't use all of the features, but it just all seemed to make sense.
That's something that's taken a right dive as well recently, right? With Deliveroo and, all of these ride sharing and delivery and, kind of milk run and all these types of businesses. We're coming to a wrap up, but before we do, Chris, how are you planning to spend Christmas with your family?
I can't wait to get back home to the Northern Rivers of New South Wales, which is a beautiful part of the world. And a lot of people tend to make it a stop gap between New South Wales and Queensland. So I'll be at home hosting a bunch of mates passing through. So really looking forward to that downtime and just being present with my young, chaotic family.
What a beautiful family you have as well. We're really fortunate to spend some time with you a few months ago. And
Yeah, we drank lunch.
we did. Yeah, we did. Yeah, we did.
And you outed yourself as a muso as well, by the way.
Yeah,
so
I did,
just saying.
Yeah,
Imagine the jam session after that lunch.
yeah. I'm the producer, mate. He's on the keys.
No, it's me, Mark Morrison. And Mac is back.
You look just like him.
Dexter and the Pomcasts. There it is.
And yourself, Ben, how are you planning to spend Christmas?
Well, I think last year I said I'd be chasing an 8-year-old boy around the beach at Coogee, and this year I'll be chasing a 9-year-old boy around the beach for most of the time. We've recently got into beach volleyball, so we're vying to be the Coogee father and son beach volleyball champions 2022/2023. So we'll be working.
Might be like Tom Cruise, eh?
Exactly right. Just like that. Just like that. I knew I'd get rinsed eventually. I've done well to get to the end without being abused. So I'll take that.
Well, guys, this has been a lot of fun, and thank you for joining me.
No, a pleasure, Dexter. Thank
Thanks,
you.
Dexter, and thanks for all you do for the fintech community.
Absolutely.
Thanks, chaps. Well, thanks for joining us, folks. Chris, if anybody wants to get in touch, what's the best way for them to do that?
Definitely LinkedIn. I'm all over that network like a rash. So
Awesome.
find me there and we can start the journey.
And Ben, what's the best way for people to get in contact with you?
Just
one way.
LinkedIn as always, and for other stuff, Superfit Dad on Instagram.
That's it. And you can always connect with me on LinkedIn and Twitter. Thanks for your support, and wishing you and your families a super safe and a wonderful festive period. And make sure to give us a like and a subscribe if you want to give me a happy Christmas. If you're listening on the podcast, hit follow and make sure to leave us a 5-star review. Until the next episode, stay safe.